Hello everybody, welcome to the technical analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. As we get going, if you would, please type OK in the chat box if you're hearing me clearly and seeing my screen all right. Just waiting on a few more responses to make sure everyone's up and running fine. If you would, type OK in the chat box if you're functioning OK on your side. All right, great. Thank you. I've got enough responses. Looks like everybody's up and running fine. If anyone has any issues, just let me know as we go along. As always, keep in mind, no one trade is guaranteed to bring you profits. Each and every trade that you take has risk involved with it. What's nice is that our AvaTrade Go mobile app, which we'll be utilizing today, and the web trader, which we'll also be utilizing, has some great tools on it for helping you with your risk management. So that will help hopefully take care of that side of things in terms of your risk management plan. And you know, the other side of the coin here is each and every trade that you take has a good potential for profits as well. So what we want to do is go after those potential profits in a way that makes sense, that manages risk in a way that makes sense for you, your goals, and your account. Now, keep in mind as we go along that what we cover is not meant to be financial advisement, but is coming from an educational perspective. Now, real quick, before we get on the live charts and look at some technical signals that are coming in, what is technical analysis? For anyone who's new to trading, technical analysis, to put it simply, is historical data on price movements. It's looking back on a chart that shows the price movements from the past and looking for patterns, looking for movements that maybe lend some predictability to future movements. And so if we're looking at past movements and we see patterns and price levels that seem to be important and indicative of future movements, then that may help us to predict what we think will happen in the future. There's no guarantee that that type of analysis will work all the time, but many traders find it very helpful, and that's what our focus is here, is to get on the live charts and take a look at what are the price movements that have occurred in the past for different instruments, and try and have a strategy as to how that can help us maybe with our trades moving forward in terms of entry points and exit points that we might prefer. And obviously you can use indicators that can assist you with that as well, which are available on our platforms also. As we go along, if you have any questions, you want to give any input, please do so in the chat box. I'm happy to address questions or relevant information that you might have to share. Now, when we're on AvaTrade's main website, you can find our AvaTrade Go mobile app under the trading platforms link, and then you see AvaTrade Go. So if you're using a mobile device, if you don't have our app yet, I would say after the webinar, make sure you get the app, because it has some useful features that we'll be going over soon that can help you with your technical analysis, which obviously is our focus in this webinar, and also with the risk management side of things as you apply your technical analysis into your trades. And then you also can log in from the main login up here in the upper right from our website into the web trader, which we will also be looking at in the session. Now, real quick, I'd like to get a snapshot of the fundamental view of what's happening before we do the technical analysis. And you know, you can find a number of sources. I like this little snapshot to look at, because you can see the futures market here. US 30 and US 500 futures are red. Okay, so the markets are down a bit so far today on the futures market out of the US, and we can see the US VIX 500 is up, which means the VIX index, if you're not familiar with it, is a measurement of volatility or fear that's on the market. So we see real quick, US dollar index is green. The US 500 VIX volatility index is showing increased fear on the markets. So when the US dollar is strengthening as a safe haven type currency. And fear is up nearly 3%. It's kind of moderate increase in volatility, but it is up. And we see a moderate drop in the futures market. These green numbers here are from yesterday. These are the actual US 30, US 500, NASDAQ. This is the closing price yesterday. So yesterday was positive momentum. It seems like it has turned a bit, and the futures are red, and volatility / fear is up with a strengthening US dollar so far today. So with that snapshot understanding that, okay, fear's up a little today, and volatility's up a bit, and the futures are down as the US dollar is strengthening a little, that might give you a preference as you do your technical analysis as to what direction you might prefer to trade. Okay. Now, if we want to take a look at the mobile app, I'll go ahead and expand the view I have here in the lower right corner of my phone. Let's do a full screen view and take a look at the AvaTrade Go mobile app, how it can help you with your technical analysis and your risk management. So a nice feature to use, if you just tap on this little tab here in the lower right, the 3 lines, scroll on the options, and if you come down and look at either featured ideas or analyst views, you will see free signals, free technical analysis done for you. And here they are, time-stamped as they came in. And even if the time has passed several hours, it doesn't mean the signal's not still good. It gives you the price level, like this Canadian JPY. Intraday, the downside prevails as long as 89.94 is still the resistance. Meaning, as long as the Canadian dollar JPY didn't go above this price, then it's still expected that the Canadian JPY will fall. Okay? And so maybe we look at that. If we want to look at that signal, we tap on it, and it expands on the technical analysis. So we see that this is an old ranging pattern here. And this was the upper resistance and the lower support. So this was an old area of resistance down here. So if this movement is dropping, they're saying take profit as it gets near this price. That's where it will find support next. And as long as the movement didn't go up above this blue line, then it's still expected that there's downward momentum. If it did go up and go above this line, it gives you an alternate scenario to buy then if it breaks above this blue line with take profits up here at these green lines, at these prices up here. So it goes through that. It says our preference, the downside prevails as long as 89.94 is still resistance, meaning the price didn't break above 89.94. And then they're showing take profits down here around 88.74 or a little higher than that. Okay, depending on where you want to take your profit, 8,800, 88.74. And so the price levels are there, the support and resistance levels are drawn. The red lines are the take profits on the market sell that they're saying is the preference. And if the price is above this blue line, then the alternative scenario is buy and take profit up here. What if you wanted to sell now but prepare in case it breaks above this resistance to buy? What kind of pending order would buy if the price breaks above this blue line? For those of you familiar with the types of pending orders, a buy stop pending order buys from a higher point. So you could prepare for what they're calling the alternative scenario. You could have a buy stop pending order prepared to buy if the price breaks above 89.94. So a pending order at, say, 90 to buy if the price gets that high, with take profits here and here at 90.38 and 90.54 in that range. And a market sell with take profits down near these suggested prices. That's what the signal is telling you. Now, Does the signal make sense with our fundamental snapshot that we looked at? And the answer to that is, yeah, it does make sense, because if there's fear on the markets right now, then safe haven currencies should strengthen. And the yen, the Japanese yen, tends to be a safe haven currency. So if there's fear on the market, the volatility index is up, we saw that, then we would expect safe haven currencies to strengthen. The Japanese yen, the Swiss franc being two of the top safe haven currencies when there's fear that people buy. And so it makes sense that the yen would strengthen and pull the Canadian down. Why would the Canadian be a good pairing? Well, because oil was dipping down with some of the fear today as well. So, and the Canadian dollar, many times, if oil is looking like it's dropping, many times the Canadian dollar is weak because oil is their number one export. And if the value of oil is expected to drop with all the fear, economic fear, then maybe you expect the Canadian to be weak against the yen. So you've got maybe what's expected to be a weak horse, the Canadian, paired against what's expected to be a strong horse, the yen. So the signal then makes sense, fundamentally speaking. So now we understand the technical analysis, the price levels of support and resistance, where you might want to take profit just before the next support level, where the resistance is up here, that if it goes the wrong way, you'd say, okay, I'm out. It must be a bad signal. And then you have an alternate scenario as a backup on that signal. If it breaks above the resistance, then that confirms an uptrend and you might buy. So you've got a nice strategy built in right on this chart that you can utilize. Okay, so now all we have to do is go to the Canadian JPY. Keep in mind these price levels, 89.94. As long as we're below that, we can sell. And as long as we're above the support, it hasn't reached the take profit price yet. Okay, so then let's go back and let's take a look then at the Canadian JPY. And let's look at the chart and see what it shows us. And so very easy to maneuver the chart on the app. I'm just pinching it and it shrinks it like any smartphone technology should do. We see we are certainly below 89.95. It tested it and came right back down. You see, so now we're below after a test and a drop on the one-day candles. We're below that 89.95 mark. The take profit was down here around 8,800. That's where the support level is here that the signal showed us. So a market move still makes sense based on the signal. Okay, so and if it breaks above this level up here, that's where they're saying take the buy then. If it breaks above this resistance up here around 89.95. All right. And if we want to go from the one-day candles and take a look at something smaller, 4-hour candles, we can see it's a downtrend on the 4-hour candles. And it actually just broke this little support level right here. See, this was support. It tested, and now it just broke below this support level with that wick right there. Okay, so if you're saying, I expect the Canadian to drop against the yen then and maybe give up this ground down to 8,800, which is where the support is. If that's how you feel, if you like the signal, then all we have to do is set it up based on the signal, based on the technical analysis. So we take a look, we can use AvaProtect, and we'll talk about that in a moment. And I can, before I sell, I'm going to program a take profit and stop loss. So we saw the signal suggesting down around 8,800 as a take profit because there's a support level down there. So we can say 88 and change, 88.10, 10 pips above the support level. Okay, my potential profit, 117. See how it calculated my potential profit for me. Now my stop loss. Remember, it said if it gets above 89.95, then it's no good anymore, right? That's what they told us in the signal. That's what the signal told us. So if I go then 90 even, Then if it hits 90, it broke above the resistance and I'm out. So now I see, okay, I'm risking 50 to make 117. And let's say I'm willing to risk, I don't know, 150. Maybe I have a balance of 15,000 and I want to risk 1%. And so I say, okay, 1% of 15,000, I'll risk 150 per trade. If that's your risk management plan, to risk that amount, now I can, before I take the trade, be sure that I'm risking the amount to my stop loss that I want. So now I go up and I put a new trade size. Let me try 0.25. Okay, now I see right away I'm risking 128 to my stop loss. Okay, I can go a little bigger if I want to risk 150. You see how the app is doing the risk management for me. 0.29. And there, now I'm risking 146 and change. So it's almost my 150. I could go 0.3 probably and be okay. And so now I'm risking just under 150 with 0.3. So now I know the proper trade size, and it's based on what's my risk tolerance, how much am I willing to risk on the trade, also what kind of potential profit do I want to go after, and also what's the distance to my stop loss. Because if the stop loss was closer, then I could go bigger and still risk the same amount. But now I'm risking about 150. I've got a potential profit of more than double that, and I'm in the direction of the fundamental news and of the technical analysis that's backed up by the signal from Trading Central. So now I'm ready to sell, okay, in this example. So there I go. I'm in on a trade. My technical analysis is completely done in a way that makes sense in terms of the price levels. I have a signal that helped me out with it. I chose Canadian JPY because that signal also lines up with the current fundamental situation that we understand. The volatility is up, the fear is up a bit, and the US dollar is strengthening. The yen and Swiss franc are strengthening as safe haven currencies. And so, and oil has been a bit bearish today. So it all makes sense fundamentally, and then the technical analysis lines up as well with the support and resistance levels. Type OK if you're with me so far on that, if you understand how to use those tools, or if you have any questions about what we just did with the technical analysis or the tools we use, let me know. The whole point of the tools that we created, the AvaTrade Go app, the web trader, and the premium services from Trading Central that are available in the app, and the advanced features in the order window for calculating your potential profit for you, for calculating your potential loss to your stop loss. All those things are built into our platform and app to make it simpler for you to go after the profits and understand your risks, and have the proper fundamental and technical information to help you out. All right, looks like everyone's all right. So let's go ahead. We'll take a look at another example. Maybe I'll go to the home key. That's this one down here. And let's actually click on the tab over here on the right. And let's go to some more signals. We'll take a look. What else is recommended right now, since we like that signal so much? Maybe I'll click on my analyst views again, or one of the other options to get some information from Trading Central. And let's see what else is here. You know, all of this makes sense, right? US dollar expected to go up against the South African rand. Why would that be recommended? We just saw that the US dollar index was strengthening and that there's fear on the markets. And we understand the US dollar tends to strengthen when there's fear. So fundamentally, it makes sense why this signal is saying to buy on the US dollar, South African rand. Okay? And the same with US dollar, Singapore dollar, etc. Let's see what else is here. US dollar up against the Mexican peso, against the Turkish lira, on and on. The ruble. It's a trend, right? We can see every recommendation is for the USD to strengthen against everything else. Those are the signals. I think let's do this. Let's go to the web trader platform now, And let's look at something on full screen like crude oil and see if indeed is crude oil pulling down with the fear. What about gold? And if the US dollar is strengthening, usually gold drops as well, because gold goes up when there's fear of the US dollar having inflation. Gold is an inflationary safe haven. So we might see gold dropping to a price right now that if in the bigger picture you still think there's inflation, which there is on the economies, maybe you look for an advantageous entry point, take advantage of the strengthening of the USD today to go with a longer term view on something like gold or crude oil that you think actually all of the recent inflation could cause those prices to go up if there's a drop today in those prices. So you can try and take advantage of the current fundamental situation to give you a great technical entry point for a bigger picture fundamental situation in the opposite direction. Okay, the first example we just did, we went with the current wave. Today's fear, we went with that and sold on the Canadian against the yen. Now we can try and do the opposite. Let's try and find something that has dropped with the fear today, but that maybe in the bigger picture you expect to go up, like maybe oil prices or gold value, etc., if that's what you believe. And we know there's been some hyperinflation around the world, which means gas prices have been up, oil prices have been up, gold had been rising for a while, etc. So let's take a look, see if we can take advantage for some swing trades, some moves where rather than going with the current trend, we'll try to go in the opposite direction in a bigger picture type move rather than a short-term move, if that makes sense to you. No, Razwana, I hope you're still with us. The webinar's not frozen. I think it's on your end. Okay, so let's take a look then in the web trader. If you log in here, you'll be in this platform, which we call our web trader, which trades right on top of your MT4, MT5 accounts. Okay, and let's take a look at crude oil. See how easy it is to search for instruments using our platforms, because it's not so easy on the MT4 and MT5s. They're a bit cumbersome to find instruments through the big list that we offer. Okay, so here's crude oil, and we're on 1 hour candles right now. And indeed, look, crude oil has dropped. Exactly what we expected to see even before we looked at the chart. Why did we expect to see that crude oil was dropping today on these 1 hour candles? Because there's fear on the markets, and because the US dollar index showed that it was strengthening. And so that means usually crude oil will drop. So had you saw earlier this morning, you would have also saw the futures were red, US dollar index was up, the volatility index was up, and so you could have sold on oil way earlier today, and it would have been an easy profit. Now let's say we're looking maybe for the opposite, an entry point to buy on oil, to say, okay, I believe there's inflation in the bigger picture, maybe fundamentally speaking, and maybe I want to find a nice price if oil drops further to buy from. So you see here a line from the last webinar that I did. We drew a support level down here. You see the price hit around 71 and bounced. It hit at 71 here and bounced. So perhaps this will drop to the same price of around 71, and that might be a spot you'd look to buy if in the bigger picture you're bullish on crude oil. Okay, so how do we do a pending order on crude oil? Very simple. Just type or click on this box, execute when price hits, and type the price that you want to buy from. So I can say just above this support would be 71. So maybe I want to buy from 71 and 10 cents just to be sure I don't miss a bounce if it's going to bounce off this price area. So I'm buying if the price drops to 71.10. And by the way, you notice I don't have to say sell stop or sell limit or buy stop or buy limit, pending order types, which can get complicated if you're new to trading. You just tell it when you want to buy or sell from, and it makes it the right type of pending order. Very, very simple. And then if I enter at this price, where might I want to take profit? Very simple. If I get in above this support level and I expect it to rise, then my take profit could be at the resistance level up here. You see resistance, down. resistance, down. It broke above once and went right back below that price level. So there seems to be resistance up here at about 73. So I could say, all right, kind of a moderate time frame type trade. It's a decent distance. It's not, 95 a barrel, but it's also great. It's not just a 50-cent movement either. So I'm looking at, in this example, 73 as a price point maybe for a take profit. And then my stop loss, if I'm entering here at 71.10, to get below the support level, my stop loss could just be right down here at 69.5, something like that, 69.6. So if I then put stop loss 69.6. Okay. Whoops, I clicked in the wrong spot. Let me do that again. 69.6. And so now we see my risk is less than my potential profit. Okay. Going after $95 profit, risking 75 cents. Now I could look at the bigger picture. Let's go off the 1 hour candles. Let's go to 4 hour. And I can say, whoa, wow, okay. If it bounces off this support, I might not just take profit at 73. Maybe I take profit at this old support up here. Support, 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 support. And this was a much bigger breakthrough. So if it is going to rise off this point down here, maybe I look to take profit up here closer to 75, which is a more major resistance level. And if that's the case, then maybe I say take profit at 74.9. So 74.9. Now my potential profit is about triple. Okay, not quite triple, but almost what I'm risking. And once I decide on a price level that makes sense for my take profit, based on the technical analysis, that's a really nice support level, or old support level, which should act as resistance. It was a rapid drop, and many times after a rapid drop, once the market swings, you can get a rapid rise. So we'll see. It's a possibility. And you're not risking much if you get the price that we're after on the pending order. So now I can say, okay, if I want to risk 150, which was what I had suggested in the last trade in my fictitious risk management plan, if I decide I want to risk 150, now I can change the trade size to 0.1. And now I'm risking possible loss 150, possible profit 380. So I have my risk management done. The technical analysis is done. It makes sense, take profit, stop loss. And so now I enact that buy pending order. So now you see over here, I have one order, which is the pending order we just opened. And I also have one open position, which was the Canadian JPY. Type OK if you're with me so far, or questions if you haven't. All right, great. Looks like everybody's okay. If I see any questions pop up, I will do my best to address them. I must be doing a good job. All I see is okay, and I don't see questions yet. Okay, so let's look at gold. I mentioned gold, so let's look at it. Expand the chart. Scroll back a bit. You see some of my old price levels that I drew. And what we see here on gold is it's right around 1780, which is a support and resistance level that I drew in a prior session. And the US dollar has been strengthening, so it makes sense that it dropped towards a support level. Let's go to smaller candles, 2 hour. Okay, and we see that gold indeed has been going in the downward direction on the 2 hour candles. It came down, bounced around sideways, came down more. And let's go 4 hour candles. Expand the view a little bit of time. And then you can start to look and say, okay, I see it's right around this price level, which seemed important. It could drop to the next support level. And maybe if you are bullish on gold because of inflation fears you think will kick back in with the supply chain problems in the US and other places, and the high oil prices that have been so rampant with gasoline costs up and retail prices up, grocery prices up, you name it, there's been inflation worries. Maybe you say, okay, I'll take advantage of gold dropping with today's fear, with today's strengthening of the USD. And you say, okay, I can put my stop loss below this price and my take profit up at this major resistance level, which was a major support level. Again, rapid drop many times results in rapid bounce back up. Not always, but many times. And so this is a major resistance level now if the price comes back up. So taking profit somewhere up here could make sense. That's around 1840. Okay, so if we're going to prepare a buy position, we say take profit 1840. This is with an understanding that likely gold could drop a little bit more today with the USD being somewhat strong. But it's with a bigger picture view that I'll put my stop loss far enough away that it can withstand some further dropping of gold as USD tries to strengthen today. But it's a longer term move where you're saying, I believe that longer term, the technical analysis looks like this should come up and challenge the resistance with all the inflation fears maybe that exist. Okay. And I'm not saying you have to believe that, but that's the scenario we're setting up here. If you believed that, then this is the technical analysis you might do for stop loss and take profit. Take profit before the resistance up here and stop loss below this support level down here. So it would be below this wick down here. So maybe 1760 would get you below that wick, okay? So 1760 as a stop loss. And so now I see, okay, with that setup, I'm risking 113 to go after 286. So again, better than 2-to-1 potential profit to risk. It's a nice ratio. The technical analysis maybe is on our side with the two support levels to help us out before it would hit our stop loss. And if it breaks on an uptrend, it's got a lot of room to go before it reaches this major resistance level to take profit just before that. So now we adjust the trade size to say, okay, if I know I want to risk 150 on each trade, then, or whatever it is you want to risk, right? Then it's easy to do the risk management. Okay, I can see I can take a little larger trade, 0.07. There, now I'm risking 158. Maybe I'm okay with that. That's close to my 150. So potential profit a lot more, 400. Okay, if I like the setup, now I buy. Okay, and that's a market move. You also could set up a pending order to back that up, that if it does drop to the next support level, you could buy from just above this support level with even smaller risk to your stop loss down here. Okay, so you have that option as well to have a pending order for a second move if you believe, hey, yeah, it could drop down, and then you're ready to grab a better price also if it does that. Any questions, comments before we end things? I think we've been going probably long enough, good 35, 40 minutes. Any questions, comments? Okay, great. Well, thank you everybody for joining. I think we're going to have some nice movements today. I think we'll see some bounces off of support levels with some of the instruments that are dropping, and the opposite, some bounces back down from instruments off resistance levels as they're rising up. But back yourself up with your stop losses and prepare pending orders in case some headline changes the momentum today. Razwana, yeah, I'm sorry that you were freezing up on your side. The webinar is recorded. It'll be uploaded to our YouTube channel by tomorrow, probably by later today. So certainly by tomorrow, you should be able to watch it on our YouTube channel, along with all of our webinars that are uploaded just the same way. So expect maybe some ranging movements today being possible, because while the volatility index is up and fear is up, it wasn't up dramatically. We saw a 3% increase in the volatility index, not 30%, right? So there's the possibility for some of these movements that went one way to come back the other. Okay, so you could go after some entry points to look, if you like some of the entry points like we looked at here on gold, maybe to bounce back up, oil to bounce back up maybe, etc. But obviously you want to back that up with pending orders, maybe in case the opposite happens. Have yourself ready on the other side of those price levels to switch the strategy. Tobogo, good question. With regulatory rules, I must use a demo account. So this is not a live account. This is a demo account. Even though it says real at the top, I do that so I have all the features with Trading Central and everything. But it is actually a dummy account that I am required to use for webinars. Good question. Time frame of analysis. Good question before we end things. It depends on what you're doing, right? When we were looking for shorter term move on Canadian JPY, maybe we're looking at 1 hour candles, 2 hour candles or smaller. When we were looking, okay, what's the bigger picture on gold? We looked at 1 day candles, 4 hour candles, so that we could get a bigger picture view of more important price levels that are more of a longer term goal, because then we're looking at larger time frames. So if it's a longer term type move that you believe in, you're probably looking at the bigger candles, one day, 1 week, 4 hour. If it's a short term scalp type move, maybe you're focusing more on the smaller candles, 1 hour, 30 minute, 15 minute, etc. Good question. Okay, everybody, I think we'll end things here. Thank you for joining. And good luck with your trading throughout the day. I think you'll see a lot of nice trending and some bouncing type movements that you may be able to take advantage of. All right, bye for now. Thank you for joining.